Good evening, everybody. That's one's, I've just got moved around in the barn a little bit to clean it up. There we go. No, that's a 1956 Mercury Montclair. Okay. We're still kind of getting everything prepared for the end of this month of doing a session uh, on the emotional part of correct trading, which becomes greatly simplified using candlestick charts, just because you're basically applying the common sense of the charts into your own common sense analysis to keep your emotions out of your trading. So I'll kind of step into that as we get going here a little bit. So what we want to kind of point out is the first step for any analysis is which way is the market going. So obviously we've had this big uptrend. Now we've been moving sideways. Does that mean we're getting ready to turn over? Well, if you apply the different markets, we can see that the NASDAQ is still moving up nicely. Probably, I would suspect, even if we came somewhere through there, somewhere up in this range. So we have a few more days of upside, I would suspect. And with that, if the NASDAQ's moving up, more than likely, this market isn't ready to turn over. This trend is still in progress. So that does quite a few good things for us as candlestick investors, because we can do our very simple scans to find which stocks are going to be acting the best during a steady uptrend until we see a severe reversal. We know that the oil stocks are kind of getting sluggish only because we're getting into this range where crude oil is kind of moving sideways. Doesn't necessarily mean that's devastating to the oil stocks, because what it boils down to is it pretty much tells us there's now a stable price in the oil market. And that means the evaluations of the oil stocks or oil companies are going to be based upon their reserves versus crude oil prices flipping up or down. The other things that we follow is we can see that, that's not what I want to do, that gold is still moving up kind of steady after this downward trend channel. And for some of those, let's see, one or two things, Bill. Either you're logged in twice, which it doesn't look like you are, or you may have to log off and log right back on again to get rid of the echo. But one of the very simple analysis tools that the Japanese race traders provide for us is, where do most people sell? They panic sell at the bottom. So if we see a gap down when you're in an oversold area, that means you start watching for a buy signal or for buying. Going through the futures, there's really only one that looks attractive right now, and that's wheat. The other, I say the other, so I didn't check on corn. Corn, yeah, stuck sideways, and Soybeans kind of stuck sideways. Nothing real great trading in there. And we're watching the kind of the J-hook pattern setting up in live cattle. So live cattle, as you can see, came up, did the bobble, broke through, came up until you had a left-right combo. In this case, supported on the 20. We have a Morningstar signal. Stochastics currently back up. So the probabilities are if this opens positive tomorrow, we know pretty much where our target is, somewhere in this trajectory. And so a lot of people ask, well, if you know something's going to be bought, why don't you jump in right away? The reason we like to see confirmation is we were ready to buy cocoa. I put out a recommendation to buy cocoa at 226 or 2,265 right up here on a positive open. Well, they gapped it down, so that kept us out of that trade. Coffee isn't doing anything of any great consequence either. It's had a move. Now it's kind of stuck in here, so nothing here right now to tell us there's any great upside to coffee. Obviously, if it comes through the 200, you'll be all right. Oh, Mike, I don't even know how to get palladium, and I'm not even sure there's enough contracts in palladium traded to make it even where you can get in and out easily enough. I don't even really know what the symbol is for palladium. I'll try. PL? No. Gold is still in a, whoops. Oh, that's January. Looking at February gold, which is still in this nice uptrend. So it broke this downtrending channel. And that little doji gap up through the resistance level would kind of lead us with stochastic still climbing up to the expectation that we're heading for the 50-day moving average. Palladium, all right, there's palladium. So you're getting back up toward the high. You did have a little shooting star. Yeah, I just don't know enough about palladium as far as this volume. But at this point, if I was long palladium, I'd probably have a stop at yesterday's or the previous day's open. If it comes down through there, our evening star is setting up. With gold still slowly moving up, that still makes a lot of these gold stocks very attractive in the sense that they're all coming out of the scoop pattern. And usually the scoop pattern slingshot effect is usually fairly substantial. If we see something like this, this is what we expect coming out of that little scoop pattern. It's a very strong up move. Let's see. Copper. No. I don't trade copper enough. Yeah. Copper. Starting to slowly come back up. I'd be more apt to be a buyer right through this level, confirming that they're supporting here. Okay, so let's see. We were looking at the gold stocks. They all have kind of the scoop pattern. We're staying long. Nugget also has that scoop type pattern. Notice that it's using the 50 as support. If you're long, you stay long. If you're looking to buy, you put a buy stop right up here. If it comes up through there, it pretty much tells us what happened. They supported on the 50. If they support on the 50, where's our next target? Up here to the 200. I've been getting some questions where people wanted more clarification on how to structure our portfolio so that we keep our emotions. So I'll go back through that real quick. Yeah, I used to renovate houses in Atlanta, Georgia, and many times our whole copper system would be stolen out from underneath the house. No, you still have that scoop element. Remember, when you see the scoop, that's what you should expect, is this steady up move. That's why I keep using this one as an example, that when you come out of this scoop pattern, this is kind of what you expect, is that steady uptrend. And how long do you hang on to it? Until you see a sell signal and a close back below the T line. So back to some of the questions on portfolios. The reason I put 10 equal dollar amounts is I see many people very obsessed, is that the word, on their position, and wanting to know or getting very panicky if they see something pull back, even if it doesn't negate the pattern. So I can remember on Friday, a lot of people saying, "Oh man, what do we do with Nugget? That's not looking good." Well, to me, it didn't really matter, because if I've got 10 positions on, remember, we are working off of numbers that are extremely high as far as percentages of being in correct trades. I mean, there's an old adage in the futures business that if you can make a profit on 55% of your trades, you'll make a fortune. So just as an unofficial figure, I kind of calculate that probably 70% of my trades are positive. Now, again, I use the caveat that some of them may only be positive by 0.3%, but there's others that might be positive 10, 20, 30, 40, 100%. So the reason I put on 10 equal positions is, one, I don't want to be looking at 25 positions at night, because my time is better spent analyzing my positions or using my time to analyze the positions that I have on without wearing myself out, number one. And number two, I use approximately 10% for two reasons. One, it makes me very diligent as far as seeing what that position is going to do the next day. So if I've got 10 positions on, and this is one of them, and I've broken out, and I think I'm in an uptrend, all right, I can quickly look at this and say, all right, there's nothing yet to tell me there's anything to be concerned about. I can go to my next transaction. Nothing here to be concerned about. Still in a scoop pattern. Nothing here to be concerned about. I'm maybe short this position. I can say, whoops, now I've got something that should be heading down, but it looks like it's basing in here, and I'm in the oversold area. So I need to see weakness. So I already have, and that's another thing, Marcus, is the T-line keeps me much calmer. And that's, Bob, you're pointing out a point too. If 6 is only what you can handle, then just don't do any more than 6. But I'm looking to see, can somebody help Sierra get rid of his echo? But I look at this one, say, all right, I can see it's basing. It's not doing what it's really supposed to be doing unless it breaks down hard tomorrow. And then I also know that if this opened positive, I better close out my short position right away. So I'm already evaluating each position as if it has something to be concerned about. Not really, until I see a confirmed sell signal. J-hook pattern, 45 degree, not anything real worrisome yet. HBM, oops, this might be a little bit, needs some analysis. So I'm looking at something like this, and that tells me, all right, I'm getting a little bit of sluggishness here. So I already have a star next to this one that says, if this opens lower, starts trading down, where's it going? It's probably coming back here to the T line. So it's not a strong chart as of tomorrow. So I close it out. I can always buy it back. So if I go through my 10 positions, which takes no more than a minute and a half or 2 minutes, if I can look at this one and say, all right, I bought this because of the fry pan bottom, there's nothing wrong here, just stay with it, I can make my analysis of hopefully 6 or 8 of the 10 are moving in the right direction. I might have 2 that needs my attention tomorrow. So I'm not having to watch every single position tomorrow. I know which ones I really have to go after. So when I do that, again, the reason I want 10% of my trade in each position is each one is significant enough that I want to make sure that it's doing the right thing in the portfolio. On the other hand, if something gets slammed, and let's say, for example, tomorrow they gap this way up here and I had to close it out up here, it hasn't devastated my portfolio because hopefully the other 9 positions are working well and offset that one big bad trade. But what we really are looking for is that one out of the, or 1 or 2 out of the positions looks like this and it opens up here. That's what we're looking for. So if my 10 positions are, let's say overall 9 of those positions are up 1.2% on a net basis, and then you have one like this that's up 100%, well, that starts making your overall portfolio returns fairly strong. I'm not trying to find huge moves like this. I'm definitely trying to find the huge moves like this, but I know that the percentages are that as long as I'm in a chart pattern that's going in my direction, the higher the probability I'm going to be in a situation where I have that opportunity to be in a big trade. So being in 10 positions, equal dollar amount, makes each position a unit. So I don't have my emotions plugged into any one position any greater than the other. So again, this is all part of, this is give us a rationale for 10 positions in your day trading style. How about us who have daytime job, and any comments? That's not day trading. Chuck, I am a swing trader. So when I bought this position, I knew I was going to own it for as long as it was in an uptrend, which could be anywhere from 2 to 10 trading days. So based upon your situation, that if you're working and you're setting up your positions at night, looking for entry levels that you won't be able to watch on the market open because you're at work or traveling to work, you're going to have a different trading program. If you're a day trader, I'm not a day trader. I don't have time to do day trading. But I would still do the same thing. I would have, if I was having to go to work every day, I'd be doing the same thing I'm doing. I'd have 10 positions. How do you position size for options? As I mentioned the other night, if I've got 10 positions on, but I want to trade some options also, I might take one of those units. Let's say I have a $100,000 portfolio, and I've got 10 units of $10,000. I might take one of those units and make that my option trading money. Now, I'll do the same thing with that option trading money. If I've got $10,000 that I'm going to put into option trades, I might say, all right, I'm only going to trade 3 option trades, and I'm going to only put $3,000 in each position. All right, so that might take me up now to having 12 positions, but I can still handle that. I'm not going to spend all night. I'll still be at about the 2-minute mark of analyzing what I should do each night. Set up most of your positions on Monday and Thursday night. That's exactly the right time to do it, right here in the room. Is that equal price true for lower price stocks as well as $8 stocks? Yes. Now, if I find something, again, this was about a $12 stock. So if I had if I was going to put on a $10,000 position, maybe 800 shares. Well, it went ballistic because it was being bought out. Now, when we were buying it right here, we had no idea that it was going to be bought out. We were buying it because it was telling us that buyers were coming in and that this was the way that should occur. Now, did we know it was going to be bought out? No, we just knew that there was buying going on. This just becomes a benefit of being in the right place at the right time. So, Mato, if I was going to do a, let's say a more speculative $1 stock, I might only come in as a half position. That instead of buying $10,000, I might only buy $5,000 worth of that stock. Yes. If it goes to a level where it's being bought out, I don't know what the buyout price was, but I'm figuring that it's just trading just below the buyout price. Yeah, close it out. Now, there are signs, that's what I kind of figured. It was a $24 price. There are things that indicate that that's not the top price. For example, let's say they put out a buyout offer at 24 and it was trading at 24.20. That means somebody out there thinks there's another buyer that may come in, or that they aren't going to accept that offer. They're going to wait for a higher offer. So, but now you're at the point of, should you be selling it up here? Well, think of it this way. If you were buying a $12 stock, I think we bought some at $12.10 and $12.70, and it went to $23.75. Most people would be happier than a pig in doo-doo if it went to 15, where they could take profits. Up here is exactly what you were in the business for, is to try to get big profits. Take it, because what's your concern at this point? Whether it's going to go up another half a point or a quarter of a point or even a point? You made a huge profit. Take that money and go on to something that looks something like this. Okay, so there, sound. I hope everybody's got sound by this time. All right, so with that, again, the analysis or the function of candlestick analysis is finding the ones that put you in a situation where the probabilities are greatly in your favor that you're going to be moving in the right direction. And that's based upon simple analysis of which stocks are showing you the strongest signals. We recommended GKOS this morning because notice what the kicker signal of Friday did. Broke this little level, and what do we expect after a kicker signal? Usually a very strong move after that. So when it opened positive today, we were buying. Do we always get that big a move initially? Definitely not. But when you start seeing them gap up, oops, this was more of back to the ARII. Notice what happened here. Morningstar signal, and there's our steady eddy. This is why we have a very simple strategy. That if I owned this one, I bought right here, as it closed above the T line, I look at the chart, say, yeah, nothing wrong there. I want to see it open positive tomorrow. Opens positive. Each day I look at it, say nothing there, nothing there. I stay long until I see a sell signal and a close below the T line. And when it never happens, in this case, I would have been in the right situation at the right time. That was also a buyout. Again, if I was buying right here, I would have no idea that there was a buyout. I'm just buying based on a slow curve, a breakout, something that puts me in a position that tells me that the probabilities are extremely strong that I've got a big price move. Now, I say this one had a big price move potential because notice our bullish doji sandwich. We know what to expect after a doji sandwich, more upside. If we have more upside at this level, what's it telling us? That they've broken out through this level. That means we're in a new dynamic. I make most of my money on a slow curve breakout because if you're buying the stock right here or right here, your percentage moves are huge. And what's your downside? If it opens up and closes down here, you're back out of the trade. But more than likely, if they're coming out of a slow curve and breaking out, you're going to have huge profits from that setup. So that's one of the patterns that we show people how to when you're setting up your portfolio, how you do your scans each day to find out which patterns are telling you it's time to be buying. Now, we're buying the signal when stochastics are in the oversold area. Look at our big, huge Morningstar signal. And notice what happened right after it, a bullish doji sandwich. So this is what we call a McMuffin, because there's our Morningstar signal, there's our doji sandwich, or our morning sandwich, our McMuffin, and that usually implies there's going to be a lot more upside. Then notice what happened up here at the bobble or the T-line crunch. They couldn't close it back below the T-line. When they broke through, that told us everybody and their brother that was watching to see what was happening at this level is now jumping in because they see that the 50 is not acting as resistance. We're buying right here on the open because we know exactly what's happened. They've broken through on a T-line crunch. Bob, that's why you're here, because you're going to find that your probabilities of being in a trade that is moving in the right direction is going to be greatly enhanced. Whoops, did this wrong. By knowing what the signals are and what the breakout levels are, which will put you in situations where when you see that breakout occur, we know exactly what should be happening, that there's a change of investor sentiment. And notice this stock, ETRM, trading from 190, closed today at 1770. Just the visuals of candlestick analysis will put you in the right place at the right time. And what candlestick signals do for you also is it gets you out of the fear of paying up for a stock. A lot of people say, well, man, this stock opened up 40%. I don't want to buy a stock that's up 40%. You do if you understand what signal or pattern it's broken out. The smallest right now, it's not on this chart, maybe on this chart. You've got the 50, which is your 50-day simple moving average. The red is your 200-day simple moving average. The gray is your 20-day simple moving average. And again, the reason we have those on our charts is because every major money manager around the world has those moving averages on their charts, and they use that for making their decisions. Now, if you remember, or keep in mind, that probably over 90% of all investment money goes into a trade based upon the fundamentals. means less than % of all the money out there goes into trades on a technical basis. And a lot of people say, well, if everybody knows candlesticks, isn't the old rule of thumb that if everybody knows something, it's going to kind of diminish its effectiveness? Fortunately, right now, even if another 100,000 people learn candlesticks, it would still be such a minute number compared to a percentage of all the people out there that are trading that it still would not influence anything. Oh, I don't know why I got off on that tangent. So if we know what's happening in a sector, like Labu telling us that the biotech sector is acting very strong, then we know we can be going after the biotechs. Lori, the probably over 90% of all investment decisions are based upon fundamental reasons. Less than 10% on a technical basis, and probably I can't imagine any more than 1/10 of 1/10 of 1/10 of 1/10 of 1% is candlesticks. So it's still so minute that, and I look at my biggest problems a lot of times is I look at a chart that is so obvious to me. I think, oh, this has got to be so obvious to everybody else because that's a bullish Harami followed by a gap up. Everybody's got to be seeing that, and I got to remember, there's very, very few people that still use candlesticks to tell them what's going on in a price movement. Yes, as far as volume, obviously. Yes, as long as, you know, and again, we can see very clearly what's happening in a trend based upon what signals we see. Look at NVIDIA, little doji gap up through the T-line. What else can we assess from this trend? Well, we can see there's a trend channel in the making here or in progress. So this tells me you can be buying NVIDIA. Now, I may not be buying a $107 stock, but I would definitely be looking at a call strategy. And this is what our what we do in the options room is this is our upside potential. Let's even make it a little bit more. Yeah, I guess that is up here, just above the $125 level. So if we can calculate that it took this long to head down here and take this long to get up here, maybe 2 weeks, well, that means I can go after the January. I might buy the 115s and sell the 120s for very little money. I don't know what it is, but let's say it's 30 cents. And this moves like it should. Well, I've only got 30 cents exposed, but that 30 cents could turn into $5 if it go up through the 120 level before January. So using the charts, we can establish option trades that are not only high probability trades, but we can figure out where the best risk-reward factor is. Yes, new waves starting to the uptrend on NVIDIA. So if we know what's happening in a pattern, we can see what's happening, for example, what's happening in PAH, P-A-H. There's your fry pan bottom. There's your J-hook pattern. That if this keeps continuing to move up toward this level, if it breaks out, where do we know our next price target is going to be? Probably somewhere up in this area. So if that's the case, and we know this is a high probability that it breaks out, you might be buying calls. And that's another big aspect of candlestick analysis, is it gives you the exact timing, where if this is the breakout level, and you were thinking of buying the calls, buy them right here, knowing that your timing, you don't have to sit around waiting for the price to move. So you're right there at the right time. So anytime you're trading some of the biggies like Apple, there's our wave one, there's our wave two, there's our little inverted hammer after a hammer, bullish confirmation, there's our J-hook pattern. So much easier to analyze. I might not want to be buying here because that's a risky trade. I'm more apt to be buying here because I can see what pattern is telling us. Did you say credit spread? No, it would be a debit spread. And I might be buying the 115s. Let's go back. And I'm just kind of talking off the top of my head. Let's say I think over the next 2 weeks we can move up to this level, the 125. Well, I might look at a 115, buying the 115 and selling the 120. Let's say the net between those two is 30 cents. That means if it goes to 120, I bought the 115s, which are now worth 5, and if it closes at 120 on expiration day, those are worth 0. So my 30 cents has now gone to $5, which is a big, big percentage move. On the other hand, if I've got 30 cents in here to make $5 and it fizzles, I don't have a whole lot in the trade. What time frame do you use on your calls and puts? Doug, that's up to each individual. I mean, you could go after the weeklies, and it all depends on what the pattern is. Now, if I was buying some more, I've got some NVIDIA calls already from buying them earlier. But if this opened positive tomorrow, I might buy a weekly. We're already in the week. I think we're, about 2 weeks away from expiration. So right now I'm using the January time frame, the monthlies, which expire not this Friday, but next Friday. You don't have to distinguish between a fry pan and a slow curve. A fry pan, what do you want to call this? A fry pan? This I'd call more of a fry pan because it's pulled back. This is more kind of, well, that's a fry pan also. Trying to think. A slow curve is usually something you find in an uptrend, a slow curve back, and then it breaks out to the upside. But it doesn't matter what you call it. You'll be able to see it forming. Yeah, you do have to watch liquidity on anything. Yeah, fry pan, Jim's saying it right, comes in many shapes and sizes. It's just that slow curve price movement. So we're looking for things that tell us there's a new dynamic. We can see here that we had kind of a wedge formation setting up. And then look at our best friend signal, doji gap up through the 50 and this wedge. That told us there's more upside. Now, once we have a trend moving, we know that we're in an uptrend as long as we're above the T-line. But what would be our potential target? We're not too far away from getting to the overbought area, but there's a gap right here. So that becomes our target. So if we know that we break out through a wedge, and we did it based on a strong candlestick signal, same scenario. We might put a 115, 120 spread on, which might not be very much, but if it goes to the 120 level to fill this gap, whatever that was, 40 cents, might now turn into a $5 trade. So essentially, we're trying to look for trades where our downside exposure is very small, but our upside potential is very great. Not so much right now, but earlier play had a slow curve. Let's see. It could. Yeah, not great because it's kind of choppy over here. It needed to break out up here, but this is another nice analysis of candlesticks. That if you were looking at this one, bah humbug, that this might be a fry pan bottom, you get ready to buy it on the breakout. And if you did happen to buy it, you see that it closed back below the T line. That's exactly what you shouldn't see on a a fry pan bottom. You close out the position. Do you do spread trades in the last 2 weeks and the straight call purchases you are 3 to 4 weeks out? Yes. Or is it based on premium? No. It's usually based on the time frame. And the reason I don't want to be too far out in front of a, yeah, that could be a short candidate. You don't want to be too far out in front of a expiration on a spread is, let's say, for example, I was buying a spread right in here. Let's say I was selling the 52s and buying the 50s. When it popped real big, which option do you think is going to move faster? Well, obviously the higher price one is going to move faster because that's the one closer to the trading. So even though I've got a nice strong move, my 52s may have gone up faster than my 50s. So I'm at a loss until the time element kind of takes it, or I'm at a losing trade or not as good a profit trade until the time eats up the premium of the 52s and gets it back to a $2 level. Has earnings in about 15 to 17 days. So yes, you could be buying Amazon, the Januaries that expire in, what is today, the 9th. They expire on the 20th. So if it keeps climbing, my target would be up here. Okay, so let's see. I'm way off a track, trying to find some of the other things that look interesting. So again, anytime that I'm trying to set up a trade, whether it's the portfolio or an option trade, I'm trying to think, what am I going to do to keep my emotions out of this trade? So I want to find the ones that have the least downside risk with the biggest upside potential. Now this does have a little kind of slow curve. So if this started opening positive, I can pretty much calculate wave 1, wave 2, kind of wave 3 in progress. And DVMT is also was setting up as a J-hook pattern. And this is why we want to see bullish confirmation. Notice that it opened lower today, but where did it back off to? Right smack dab to the T-line area and came back up. Is this still in play? Yes. Your J-hook pattern is still in progress. Still have a very excellent place to enter. And this is what we kind of point out in our entry and exit strategy sessions, is that if it came up through there, it's telling us they consolidated, but they're still heading up. Your J-hook pattern is still in progress. Where's your next target? Probably somewhere along this trajectory. GKOS as far as tomorrow, yeah, you're getting a little bit riskier, but I would say you still got a lot more upside based upon the kicker signal and the gapping up. Anytime you see that gapping up, it tells you they're trying to get into that position with great enthusiasm, which means there's usually more upside. That's kind of a slow curve. That's I would consider that more of a fry pan bottom right at a breakout level, which also tells you something, that if they open this positive, they're kind of confirming the breakout of this fry pan bottom and telling you the 50 is not acting as resistance. You can be a buyer, and then you know your stop is. You don't want to see it close back below the 50. But the probability, say, if they break this out after this slow curve, you're probably coming back up into the trajectory of the trend. Okay, so there's other good charts out there right now. This is what we call the classic. There's your fry pan bottom. What do we expect coming out of a fry pan bottom? A very strong price move. What instigated a strong price move? Right about at the same level as when this fry pan bottom started. A kicker type signal. Now what do we have? A pullback, indecisive, now a left-right combo. If this opened positive tomorrow, you definitely can be buying because now your J-hook pattern's in progress. That's why we call it a classic, because The fry pan bottom creates a very strong price move. The prerequisite for a J-hook pattern is a very strong price move, pulls back, and you can see how it pulled back so indecisively. Doji, 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 telling you they weren't selling with any great enthusiasm. Now you get ready for this next price move. So if this right here was a 6-point move, you're going to kind of expect this to go up into about the $16 range. Oops, that's Kara also has the big fry pan bottom, so you can be buying this one. Notice where the indecisive trading occurred, right here. And it broke out through that level on kind of a double doji setup. I'd expect more upside from this one. Same scenario on Vox. I don't know, fry pan bottom, big breakout. I'd be buying this one on positive trading, or if you want to be more conservative, you wait for it to break out to this level, anticipating it could be coming back up into that trajectory. I don't know what that is. And anytime you see a pattern setup like BITA, you know what happens on a J-hook pattern. Wave 1 is usually the same as wave 3. So if you're buying right here, you knew probably at least your 200 or your 50-day moving average was your next likely target. So if you know what the pattern is, what it's doing, then you have a pretty good target to say, all right, if I start seeing indecisiveness at that level, that's a pretty good indication that was the target, and that's where I want to start taking profits. Here's another situation where if you have a big move like this, somebody was asking about this today. It looked like it closed down here, and then my charts updated. But the fact that they took it down here, and I think they're opening it positive tomorrow. This one, if it opens positive tomorrow, you definitely want to be buying. This was a big reversal signal. Where's your next target? The top of this channel. PTX, notice the pattern. There's your scoop pattern. Now what's happened when it's gone through the 50? There's your doji sandwich setup. If it opens positive tomorrow, you can be buying immediately with a high probability that this candle and this candle will be the same. Now, I was showing people in the room today that wasn't it, that if we kind of expect a doji sandwich where you have a big day, a doji, and another big day, there'll be times where this candle right here is not the same as this candle, but the next candle, that combination of these two candles is usually the equivalent to this candle. So that's just something to keep in the back of your mind. Yeah, and I saw FLDM. This is another reason why you want to see it to confirm that if it opened positive tomorrow, you could be buying. But I guess they projected lower earnings, so it's opening down here. So this is why you want to wait to see confirmation, because we want to see that the pattern is being confirmed. Oh, what did I just do? This is why when you see my recommendations in the picks area each day, I'll say buy if it opens and trades above this level. Because what we don't want to see is it opening lower and coming back down. That tells us we shouldn't be in the trade. We should be in the trade if it's confirming the signal. If there is no reaction, I thought I saw it, the bid and ask on FLDM trading lower after hours. But if it opens positive, that tells you exactly how the reaction to the news has been taken. That's when you want to be buying. Here's another one, bouncing right off. This is XL. Downtrend, gap up through the resistance level, wave 1, wave 2, right back to the 50, going into wave 3. So adding the other indicators, such as support like a major moving average or a trend line, is just more additional confirmation. That's where the buyers are coming in. EBIO, If it opens positive, it's telling you they aren't resisting after buy signals at the 200, and it's broke this downward trend channel. There should be more upside. And I think ABEO, same scenario. Notice what they did today. Came right back down to the T line and bounced back up again. CJ, we have him on our session, Chaikin on our session quite often because he's got all the indicators that if back when I was a youngin' and I stockbroker at Kidder Peabody, I kept thinking if I could find out how to coordinate all the indicators, boy, I would have something very powerful, but I didn't know how to put that into combination. He's got that already put together. And if you watch, or you start analyzing things that are showing strong on his, with his indicators, and then use the candlestick charts, yes, that's a very powerful combination. So I point out the fact that they bounced this up off the T-line because you've got to remember, nobody has the T-line on their charts. When they bounce it off of there, you know that's a natural support level. So this tells me I want to be a buyer if it comes up through this level tomorrow. That tells me this whole downtrending channel is broken, and there should be a new dynamic, a lot of upside in this price move. NVGS, best friend. If it opens positive, it's breaking out through this level and the 200, more than likely heading up into this area. NetEase also has a nice looking chart. Fry pan bottom came up through the 50. That should be in an uptrend. This one would probably be more of a slower moving price move, but a good steady move. I think we did XL. That looks familiar. Yes, that one broke out. PTCT also did a doji sandwich through this resistance level. And we're getting to this breakout area. So I've got a wave 1, wave 2, going into wave 3. This could be up another 5-6 points to the upside. So again, we're looking for the breakouts. We will be doing a session for members not too distant future on breakouts. Notice where this broke out through this level. That tells me I've got a lot more upside. When they gap up through a resistance level, that tells you there's a lot of force there because they don't care anymore about that resistance level. Your moving averages are the 200, the 50, and the 20, simple moving averages. The T-line is this black line. Very simple rule of the T-line. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. With the caveat that the further away you move from the T-line, the higher the probability you're going to come back and test it. So you're a little bit more diligent as far as watching for sell signals once you start moving away from the T-line. That's going to be another training we've got in progress of what are the indicators that's telling you it's about time to sell. Very easy to find the indicators to tell you when it's time to buy. A lot of people have a hard time selling. I forgot what I was saying. Oh, and so you've got the black line, which is the 8 exponential moving average, the T-line. And then you've got the 3 T-line, which the further away you move from the T-line, the more relevant the 3 T-line becomes. It gives you a little bit faster exit indications. UCTT. Oh, Shaw. Another one that broke out through this level. Wave 1, wave 3 is in progress. Well, I'm just goofing this thing up. AKRX, want to see this open positive. Notice your doji best friend gap up over here. You just stay long as they don't close it below the T line. If they open this positive, you got another little J-hook pattern in progress. And Fran, doji gap up off the 50, another one that has a lot of upside potential. Once it's right here at the breakout level, so if it opens positive, notice the double doji. Consolidation, doji, then they open up positive and take it up. That's usually a good indication that it's going to be heading higher. Did I do halo? Halo is an example of there's your kind of your little cradle pattern gap up through the resistance. That tells you there's another strong trend to follow. Do you recommend taking profits intraday when extended from the 10-minute chart T line and then set a buy stop intraday, higher enter? Yes, if you get up here and you're that far away from the T line and you know you've got exuberant buying going on, yes, I will flip to my 10-minute chart because I already know I'm that far away from the T line. I want to see, as long as they keep it up above the 10-minute chart T line, I'm all right. But as soon as it comes back below the 10-minute T line, I'll take my profits because that's telling me they're probably bringing it back down to the T line. Now, what's the worst case scenario? They bring it down through the 10-minute T line on the 10-minute chart. Let's say this is now the 10-minute chart, and they start back up. I can always buy back in. Richard, the doji sandwich is exactly that, a big candle, then a doji. Then we know the doji sandwich is that this candle here is likely to be the same magnitude as this candle right here. That's why we pointed out one day last week, Mobley had a big candle, a doji. If it opened positive, this candle and this candle will be about the same. So even for a day trade, you're in the right place at the right time. So that's a doji sandwich. Big candle, doji, sandwich in between another big candle. On Labu, I was pointing out that usually you have another big candle, the same magnitude. When it's small like this, usually the 2 days post that doji will be the same magnitude as this candle right here. Where would you set your stop for a doji sandwich? I wouldn't want to, if it started trading positive, I wouldn't want to see it come back down through the open because that tells me my doji sandwich is not there. So again, all of this is just kind of common sense analysis of what usually happens in investor sentiment. So these patterns that we're showing aren't anything magical. It's just reoccurring patterns based upon human nature. Okay, I guess that's about all I got. I'm supposed to remind everybody that at the end of this month, we will be starting on a session that probably everybody should take. That's why I wrote the third book, Eliminating Your Emotions, because no matter how good you are at analyzing a chart, seeing the buy signals, knowing where the sell signals are, if your emotions jump in, they screw up. That's why most people lose money in investing, because their emotions take over. Candlestick signals have a good aspect, that's not the right word, a good function for keeping your emotions out of your trades. And basically that's what helped me the best, was knowing that I was the worst investor in the world. I tried to set up everything where I kept my emotions out of my trading. So it's there's two well, two bases is knowing the signals, knowing the patterns, and then having the emotional discipline, which the candlestick signals can develop for you to keep you in and out of trades at the appropriate time without your emotions doing that for you. Okay. Is there any other general questions on candlesticks? Oh, I think the Festival for Traders, I think, is a weekend where there's 4 or 5 of us speaking, and I think that's on February 25th, isn't it? The options chat room membership, uh, that's not as expensive as the regular chat room. I think that's $750 a year versus the $997. And the reason we don't push it is we've set it up as an extra service because obviously the terminology for option trading is much different than stock trading. So instead of having the option traders over in the main room confusing everybody with their terminology, we just set up a separate room. And we have Michael Tomset, who is an excellent teacher on the internet for teaching people how to do option strategies. I'll come in a couple times a day, usually not very long, just throwing out ideas. But Michael will come in for an hour and he'll show different strategies for and analyzing charts and what is the appropriate option strategy for that chart movement. So if you need more information, if you email Abraham at candlestickforum.com, he can give you more details. You are scheduled for Festival of Traders tomorrow. Oh, at 4:30. Is that right? Yeah, I'm doing trend analysis for 30 minutes. Where can I look to find out the strongest sectors or industries? CJ, I use Metastock and I use TC2000. So if I'm analyzing my charts as far as which stocks are the best, I can go up here and say, instead of my trading universe, I want to go up to the industry groups, and I analyze them the exact same way of which ones had the biggest percent price moves. So if I know that I've got an industry that's looking good, I'm just taking one for example, special eateries. Now I can click up here and I can say, all right, change to the individual stocks that are in it, which are over here just off the edge. And I can analyze which one of those stock charts have the best. So essentially what I've done is I've analyzed which sector has the best upside potential, and then which stocks in that sector have the best upside potential. Okay, I guess we will do chart. Jim, go ahead and do the double line and just try to keep it to no more than 2 per person. TZ, from one day to the next, the intraday charts do not mean anything because as soon as it closes, investor sentiment could be changing from now to the next morning. So I would still be a buyer of this one, but I'd have my buy stop. If I haven't bought already, my buy stop would be above today's open. If it comes up through there, it's breaking out, taking me into wave 3. So I don't use the intraday charts from one day to the next because that, whatever it is, 14 hours different. There could be a major change of investor sentiment. CPE, you should have been out of this one today with it closing back below the T-line. Because you can see, obviously, one, it's closed below the T-line, and two, what's the trajectory of this trend? It definitely is not up. You want to move to something else at this time. And Weibo, you're in an uptrend. You're having trouble getting through the 50. So this makes it very simple. We know it's going to move in the direction of how they open it after a doji. So if it opened lower, I'd close out the position. If it opens up above the 50, even if I hadn't bought it yet, I'd be buying it above the 50. Bed Bath & Beyond stays short. Notice the bearish Harami right here. So if I closed out my short position on this day when it came up through the high of that doji, I'd have reshorted it on weakness because now it tells me I'm in a bearish J-hook pattern. PVHI, that one did not come up. American, you can get ready to buy this one on positive trading after today's Morningstar signal off the 50. ACAD, stay long. INSEE, we went short today, but notice where it closed. Rid of this. Closed back up above the T-line. If it opens positive, you cover your short. Then if it comes up through the 50, your bobble pattern's in progress, you can be a buyer at that point. SGYP, just stay long till you see a confirmed sell signal. The SOX, another one you can be buying on positive trading. The bullish Harami, telling you the selling is stopped, and the positive trading confirmed that the trend has started. Amazon, as we said, broke out through this wedge. More than likely, it's coming up here at least to fill this gap. Netflix, not very exciting. It's in a very, very slow uptrend. But if you like it, you just stay long. And Apple has the J-hook pattern in progress. You can still be buying this one because if this is wave 1, wave 3 breaks you out through this level, takes you a lot higher. ARWR, you can be buying this one also with the expectation at least they could bounce it back up to the 50-day moving average. CGIX, a big breakout. You'd have to watch the volume on this one. The volume has to be good. But if it opens positive tomorrow after this big long-legged doji, they're still taking it up. Means the profit taking that occurred is now over. VRTU. You stay long, but you can see what you're running into. There's your bearish Harami doji. Makes it very simple. If it opens lower tomorrow, you take your profits. Then you watch for the bobble pattern, which means it has to support on the T-line and then come back up through the 200 over the next few days. Goodyear, and nothing wildly exciting about this stock. We made a lot of money with Goodyear years back when it came from like 5 back up to 12. Let's see. Yeah, just not anything real exciting on Goodyear. And again, these big institutional traders have a much more difficult time moving around with any great resiliency. And ENB, you can stay long on this one. You're kind of broken this downtrending channel. Maybe not. You're probably right at that downtrend, the top downtrending channel. ABB, it has to open positive. Oh, no, it doesn't. it should open positive. Because notice when they pulled back, they came right down to the T line, bounced back up. You just stay long on this one. And Facebook broke this channel. You stay long. But each day I'd use the previous day's open as my stop. It probably is coming up here to fill this gap. EXAS. Gapped up. Look for a 45 degree to come off of here. FCAU. Chrysler. Just stay long. Now you're gapping up in the overbought condition. Pick a spot. And right now I would pick a spot like today's low that it shouldn't come back down through there. If it does, that's telling you the profit taking has started and they're more than likely coming down to test the T-line area. OPK, nothing here. I probably wouldn't, I wouldn't be long or short on this one right now. AYU, another gold stock. You just stay long as this stays above the T-line. See, we did that one. Let's see, PI. PI, you stay short with the anticipation it's going to touch the 50. We did Facebook. If this opens lower, yes, you can be shorting it. You can kind of presume that your downtrend is staying in progress. So you have to see whether they can get down through the T or through the 50. United Rentals, another one you can be going short if it opens weaker tomorrow. You can see the little left-right combo up here, which is a strong sell signal confirmed. I would suspect if they break through this level, they're coming back to test the 50, which there's a gap right here to fill. Anadarko, if it opens weaker, yes, watch this level. If it breaks that, they're coming back to test the 50. Okay. The Dow is kind of sluggardly, but the NASDAQ is still moving up, so there's no change of investor sentiment. One more, Whiting. If you were trading this, you should be out. If you're long-term, probably use the 50 as your stop. All right, everybody. Still looks like the biotechs and now the golds are trading off or trading up. Yes, I'll look at what the crude oil prices are doing right now. I think they're stuck sideways. So that probably means that the crude oil stocks are going to be a little bit less active until kind of shows some support back up in the mid-range of this trading channel. All right, everybody, have a good evening. I know you're all happy that the Steelers are going to the Super Bowl. So we'll see everybody bright and early tomorrow morning. We'll see you then.